Yo, family, if you are having trouble reading a stock chart, I am going to show you two simple ways to understand this in a very simple manner. So let's go protect our money. Come on. If you're new to the channel, make sure you hit that subscribe button. In this video, we are going to cover two simple ways to read a chart. All right, we're going to make it very easy. We're going to look at the current chart of the market. All right, so we just closed. Let's dive into what we got going on. The S&P closed at 3,752.75. all right, and what we have here, yes, I have a whole bunch of lines on here, but do not let that intimidate you. We are going to get rid of these lines in our mind. Okay, these are just what I'm about to show you right now. The stock market, tip number one, we move in ranges. Okay, break down the market in ranges. It's very hard to look at things and see it go up and down and up, and that is not the way to look at a chart. Look at it in ranges, and this is how we do this. All the lines that I have here represent a different range. Okay, and we see that the market moves from a bottom to a top and likely comes back down to that bottom at some point in time to test out how strong is that bottom. That is our support and resistance. All right, so this is tip one. The market moves in ranges. That is support and resistance. Okay, where we're currently at, we look at the current range of what is happening in the market. The price is at 37.52. So all we need to do is look at this as a regular graph. Okay, if we're doing longitude, latitude, we're going over, down. Okay, over and down, and here we are. This is the current price, and this is the current price range that we are in. So what do we anticipate for the S&P? We anticipate the S&P to try to get back to around that 3,800 area. All right, so what I currently look for the market for next week is we can possibly have some continuation happening because we did close near those highs. One of the things we preach here consistently is if you close at the highs, chances of continuation are good. I'm looking to see that the S&P continues that motion, right? We're going, family. We're going to the upside of things, and 3,800 is the target. This is a critical resistance level because if the resistance continues to succeed, we're going to likely continue that path of moving lower because we have been on that trend for quite some time, basically this entire year, where we have trended lower and we've made lower highs, lower lows. The 3,800 could be part of the lower high camp. Okay, in addition to that, we have our 20-day moving average, which has been consistent with being pressure. Okay, it also served as resistance. So there's a few things going on that are showing that the price has a strong likelihood of continuing to move down. Yes, Team Green Machine rolled through deep. Do they have enough muscle? All right, we'll see once they show up at the doorstep of that 3,800 Avenue and sit back, thrown out like Jazzy Jeff, and we know that they are not up to the job. All right, so let's go over and check out what's going on with IWM. And if you like what you heard so far, make sure you hit that subscribe. All right, that really helps me out. Give me that that thumbs up. All right, and you'll get all of the content. We'll have future conversations in the comments. All right, so 172.70 is where the Russell closed at, and we're going to bust this down once more. Stick around for the second tip because you're going to be like, what? So IWM 172.70, and this is the current range we are in. All right, over and down. Right, we are in this range here. So I want to show you something real fast here. Okay, we see that we are back into this range here. We got our 20-day moving average, which has been resistance in the past. We're under our 200-day moving average. There's some things going against us right now as far as the Russell is concerned. I'm going to put a line here, and I'm going to bet you that once I put it there, that it is going to line up with the lows of here, right? So this is the low, or this is the low area, right? 160-ish. If I go all the way back to here where this gap is, if I put a line here, will it line up, family? Ready? 1, 2, 3. Check that out. Do you see how support and resistance works? The ranges, right? This is further proof that the market moves in what? Ranges, okay? That is tip 1. The market moves in ranges. If you understand that, you will crack the code to any chart, all right? Any chart you see, if you understand this, this is going to help you, okay? That support is where we hit. We bounced off of it. We push past this little tiny resistance that we have here, and we are back towards those highs. All right, so I'm looking for IWM to see if it can gather some steam and continue to move higher to get to that 180 price target. If it can get there, cool, because then the next step is getting over it. And that's a whole nother story. All right, right now we are still in the downtrend. We got to get some proof to see if the price has enough power to get over the hump. All right, that's IWM. Let's check out what's going on in Dow land. All right, and that's I can't see over there, $ DJI. All right, there we go. 31,082.56. If we zoom in, what do we have? All right, remember, ranges, family. Tip 1, ranges. We're looking to see how that market moves. We have the one big huge range that we've identified. All right, we've come down to it. Now we are, ooh, look at this, family. The Dow is about to show us what it is made of. All right, we are at the resistance level. This resistance level is going to show us who has the biggest hand. Okay, who's gonna pimp slap who? All right, who you got your money on, bulls or bears? Right now the bulls showed up. Do they have an army tank or do they have a Pinto? Do they have what it takes? Right now, we've seen in this situation, the 20-day moving average continues to be dominant. All right. And now we are getting close to that 20-day moving average again. Can we overcome? Will we be victorious? I don't know. This has been a very strong trend. All the moving averages are starting to move lower, so it's got to fight a few of them. Can't write it off, because remember, in technical analysis, you do not know anything. Okay, the slate is clean every single time you make a chart read. All you're looking at is what the past has done before. All right, and in this case right now, we've seen that the 20-day moving average has been resistance, so that's what I'm looking to see happen here. Right, we're going to get towards that 20-day moving average. We're going to likely struggle and then make our way back down to the natural path that has been happening. All right, that's the Dow, and let's finally check out what's going on with the Nasdaq. All right, the Nasdaq is at 11,310.33. Okay, so when we look at this, I made this very, very clean. Okay, we got one range, because this is what we're currently in. This is the support. You can see we were back here before, and now we are bouncing off of it once again. So the 11,000 is still solid support, and that's a good sign. All right, we also have the 20-day moving average showing that it has been resistance in the past. We are not that close to it. When we do get next to it, what's going to happen? That's what we want to see. Okay, because it's nice that Team Green showed up now, because you're at the bottom, right? We're at what's considered the current bottom of the market. So Team Green was naturally going to show up. When we get to that resistance level, this is where we will figure out what's happening. All right, family, how did I do? You want tip 2, right? Thank you for sticking around. This is tip 2. All right, we have bull markets and bear markets happen. Okay, natural happenings. When you are in a bull market, I want you to understand, family, that these typically run between 10 to 15 years, all right? Max 17. right now, we are in the bull phase still. I believe we broke out in 2011 or 12 or so. I want to say 2011. It might even be 2010, but regardless of what it is, beginning of 2010, we'll just round it to there. So bull markets typically run in a fashion of 10 to 15 years. All right. Bear markets run in a cyclical thing going too, about every 10 to 12 years. Okay. So we're in the tail end right now of a bull market. What I want you to understand is that the market is very, very repetitive. Okay. This is why it is simple to understand. We just talked about ranges. That was tip 1. That's repetitive. Number 2, there's always a cycle. And we are at the tail end of a bull market cycle. So this recession that everyone keeps talking about, we're likely going to end up in it. And the reason why is because it's just about time for it. All right. Understand that the market is a very, very human interaction. Okay. Humans do the same things over and over again. We are very, very simple creatures. We do things consistently. This is why cycles exist, because we are human. We interject that in our prices. If you can understand that, that is going to help you in the market. All right. So I want you to do your little due diligence. Go check that out. All right. Dig a little bit. Okay. I could give you the gem. You got to do something with it. All right. Dig a little bit. You can check out Google. You can check books out. There are a whole host of things that you can do in order to figure out more about what I just said. All right. So there are your 2 tips. Take care of yourself. Health is wealth. All right. It's very important to make sure that you continue to hydrate yourself. Drink water. All right. Get your exercise and make sure you spend time with people that you love. All right. Health is wealth. I want to see you next week, and check out the rest of the videos. All right. Catch you later. Peace.